Hey, this is Justin with DayTradeTheMarkets.com, and certainly had a major breakout today on the FOMC announcement around 2 o'clock Eastern Time. And I wanted to kind of look at the E-mini S&P today and kind of look at it in three segments. The first would be the first half of the day where we were in a very choppy mode waiting on the news. The second would be the breakout higher. And then the third part would be where we started to see a little more two-sided activity and really talk about this in terms of what the level 3 bars are, what we call extreme buying and selling aggression bars, were telling us. Again, the market moves when one side, buyers or sellers, is more aggressive than the other. And these bars are telling us in real time when there's extreme buying or selling coming into the market, or strong and moderate. But we really want to focus on, is there follow through or is there rejection when we get one of these level 3 extreme aggression bars. And if you saw the video I did last night, I talked about that kind of being the number one key to whether a breakout is for real or whether a breakout is kind of a head fake. And that's kind of the same thing we had going on today. We also like to talk about the context of the market heading into the day. And heading into the day, we were looking, we have an up bias. Obviously, we're near all-time highs, but we certainly had some trouble getting through this 98.50 area the last few days, and that was kind of the area we wanted to monitor to see if the market could break through that level. So what I thought I would do is just kind of break it down and look at this in three segments. So here is the first half of the day, and again, with context, we're looking to see what the market can do around this 98.50 level with the expectation, or with the bias, that we'd like to get on the long side, but we certainly want to find some evidence. So we broke through that a couple times early in the day, but you could see it wasn't on any major kind of level 2 or level 3 buying aggression. And the first major piece of evidence we had was actually this level 3 selling bar right around 10:15. This happens to be a 1-minute chart of the ES. You can use this on literally any time frame, from a micro time frame to a swing trading time frame. This just happens to be a 1 minute. And again, our first major piece of evidence was this level 3 or extreme selling aggression bar right at our expected area of resistance, or the area that we certainly wanted to monitor to see if we could get a break higher. So not only did we not get extreme buying aggression when we tested these highs, we actually got the opposite, where some strong selling came in. You could see there was some follow through with that a few minutes later, and this market, quiet market, but sold off 5-6 points. And then obviously, we're waiting on the FOMC announcement at 2 o'clock Eastern. And you can see here when we got the announcement, obviously we had a huge breakout, and we could see that that was for real, because it attracted extreme buying aggression. And so when that happens, it's meeting our expectation that we'd like to be on the long side. It's proven that this is for real. And so then you have a few options as when you're trading this. Number one, and the more aggressive way to go, is you can simply put just get in at the market when that bar closes. Just buy the breakout. It's a little more risk, especially on a news day. You'd have to be a relatively aggressive trader to do that, but certainly the evidence was there. Another option would be to wait for some kind of a pullback, whether it was toward this level, this 98.50 level, or whether it was more toward the 50%. Either one of those would not have gotten filled, and that's the risk you take when you wait for more of a pullback as opposed to jumping on board. It's kind of a trade-off. You take more risk when you buy the breakout, but you have to, you're not going to miss out. Whereas if you're waiting on a pullback, you have less risk, monetary risk on the trade, but you risk missing out. However, there was a pretty nice opportunity shortly thereafter where you can see we made new highs again on 2 level 3 buying aggression bars, so extreme buying aggression. And at this point, you've also got another option. This is what we call the sweet spot trade. But when you have 2 of these bars that overlap, you can see the area right here where they overlap. That's a really nice place to get in on the market. So at that point, you're pretty well aware that you want to be on the long side. The evidence is stating that, and that's certainly a pretty low risk opportunity. Even on a Fed day, you would only have to risk 2.5 points to take advantage of that type of a trade. And obviously the evidence is pretty well in our favor. Again, we make new highs on level 3 bar again. However, this time, before we can even test the low, we start to get some selling reaction. So we reached a level that did, whether it's profit taking or the market auctioned high enough to attract some selling. You can see that with the evidence, we started to get some selling that came in here. So what is that telling us? It's telling us not necessarily that this market's going to, go make new lows. It's not what it's telling us, but it is telling us that this wave of pure buying that we've seen here, where we have extreme buying and strong buying that has follow through, has at least come to an end, and now we're in more of a two-sided market. Okay, so it's not necessarily that you just want to jump on short. If you were extremely aggressive, I suppose you could, but at least it's telling us this pure wave of buying has come to an end. So you want to be a little bit more cautious on getting on the long side and wait for some evidence potentially to come back in before you would do so. So hopefully that makes sense. Again, the point of this is just look at kind of two distinctly different trading environments, kind of as a piggyback to the video that we did yesterday, where we had a really slow market ahead of the news, kind of looking at what the evidence is telling us to see if can this market break out? Is it for real? And then when the news came out, we certainly did have a real breakout, and the evidence was just helping us see that. So sometimes on Fed days it can be pretty volatile, but if you can just kind of follow the evidence, it can certainly be helpful. So hopefully that makes sense, and if you have any questions about that at all, certainly let us know, and we'll talk to you soon. Take care.